It's 9 a.m. in Shanghai and Shenzhen. You're watching The China Show. I'm Yvonne Man.
And I'm Avril in Singapore. We're counting down to the open of markets in China. Our top stories. Oil drops while stocks rise as the US and Iran edge towards a deal to reopen the Strait of Hormuz, even as President Trump says he won't rush into an agreement. Chinese authorities launching a crackdown on illegal cross-border trading while scrutinizing firms and funds linked to the AI-driven stock rally. Also ahead, President Xi Jinping urges stronger inspections and safety controls as China investigates a coal mine explosion that killed 82 people and injured hundreds. And Indonesia's vice trade minister says a new commodity export policy will be laid out soon as investors remain worried about its implications.
Well, April looks to be a pretty lively session here today, despite some key markets that will be shut, including here in Hong Kong, South Korea, you have the US, UK, and parts of Europe. So certainly liquidity might be an issue today, but just the prospect of possibly hearing some sort of deal between the US and Iran soon, according to the president, is lifting risk sentiment. Oil is also lower here this morning.
Yeah, take a look at how Brent and WTI are faring, both below the 100 level, WTI edging towards the 90 handle. We have the dollar slipping as well, a reversal from last week's performance. To your point about this optimism of a US-Iran deal, even though based on Iranian media, they sound a bit more circumspect on the prospects of a deal. We're also watching this week for the Fed's preferred top-line gauge of inflation. We could see it marking its biggest two-month acceleration since 2021 as Kevin Walsh takes over, of course, and taking a look at how we're shaping up in the rest of the Asia Pacific with, as you say, those key markets shut. We are still seeing Japan markets adding on its tech that is fueling the continued extension of that rally. Energy-related stocks are on the back foot. TAIEX also opening well in the green. Taking a look at China futures as well, because aside from what we're seeing in terms of the crackdown on cross-border flows and trading for stocks, we are seeing DeepSeek sort of putting in place these permanent discounts for its flagship V4 Pro model. So watching AI computing related stocks as well. Some of these coal related developments following the deadliest mining accident since the late 2000s. And certainly we're watching out for potentially what we're seeing in coal futures. Energy is also in the spotlight at this point, Yvonne.
Yeah, we're showing you coking coal futures here at the moment, which is spiking up against what you've been talking about, this tragedy that happened over the weekend. So we'll be tracking all that and what this really means moving forward here for China's energy policy as well. But in the meantime, let's get you caught up with our top story. Senior U.S. officials say that the U.S. and Iran are closing in on a deal that would reopen the Strait of Hormuz, but it may take several days for both sides to get final approval. Meanwhile, in Truth Social posts, President Trump says the U.S. won't rush into a deal with Iran. He adds that bilateral relations are becoming more productive, but reiterates that Tehran will not be allowed to have a nuclear weapon.
Let's get more with our guest, Karen Yang. She is Senior Research Scholar at Columbia University. Karen, great to have you with us. So we are approaching the fourth month of this war, and we've seen already a number of head fakes as to whether the US and Iran are going to achieve a deal. What's your assessment of this? And if we do see the reopening of the Strait, how quickly can prices fall or revert back to norm?
Well, thank you. It is maybe edging towards a deal, but racing towards an energy crisis and a deepening of this crisis. And so the Trump administration has really revealed that Iran has more leverage here, and that the priority is now opening the strait, trying to get to some level of an increase in traffic flows. I don't think anyone expects normalization of flows to February 28th levels. And this is not an agreement that would be akin to a resolution, certainly, of the nuclear dispute, or has no mention, reportedly, of Iran's missile capability or its support for regional proxies. So it's a very streamlined attempt to basically resume LNG and crude and refined product flows through the Strait of Hormuz. I think, markets are reacting favorably because anything that is moving in the opposite direction of military conflict bodes well for energy prices, but it doesn't mean that things get back to normal. So in terms of timing, we're still looking at 3 to 4 months of resumption of oil production from wells. That's what Kuwait Petroleum has told us. Sultan Al Jaber said last week that even getting to 80% normal production in the UAE would take 3 to 4 months. And this is assuming that we have, very open and non-threatened, non-mined traffic through the Strait of Hormuz. So we're still looking really to the end of this year in a best case scenario for resumption of traffic. And I think there's no reason to believe that that level in terms of crude output would change the direction of flows which are being used through the diversion of pipelines. Those are going to be constant, and we're seeing the resumption or the new construction, certainly of pipelines through the UAE, and probably a resumption of some existing pipelines that go currently through Saudi Arabia. So I would say let's be very, very cautious. It is not a magical fix, but certainly some welcome news, just that there would be a bit of movement and mediation, more so on the American side than the Iranian side of demands.
Karen,
to your point about how this...
Go ahead, Avril, sorry.
Karen, to your point about how this could be a protracted issue all the way till maybe even the end of the year, we'll be still talking about this. I mean, what's your sense of the extent in which some of these longer term ramifications, how are states adjusting or perhaps also looking to alternative sources of energy at this stage?
Well, buyers of the products, refined products and crude and LNG that come out of the Strait of Hormuz are already thinking about alternatives and thinking about building new storage capacity, building new refining capacity. That will take time. But the producers are also thinking about how not to be in such a stranglehold of the strait. Now, for Kuwait, Iraq, for Qatar, for LNG, there really are not many alternatives and certainly no quick fix. And so you're going to see different positions from regional states as they try to make arrangements, non-aggression deals with Iran. And even the United States, I think, recognizing in the Trump administration that this is a threat to the global economy. This has certainly been and continues to be a rising threat to energy markets, mostly because of what we're seeing in the drawdown of inventories and storage. Many analysts have seen the end of June, middle of June, as sort of an inflection point in when we get to really critical levels in inventory draws. And so I think the White House has recognized that deadline. They're aware of it. And this effort is basically an extension of a 30-day ceasefire effort with an additional 30 days to deal with some negotiation of the nuclear issue. And I think it's important to recognize that the White House is really segregating the issues. The agreement would perhaps have two addendum, maybe one that is about how the nuclear talks proceed, agreements about how Iran would receive access to funds, which is really the Iranian priority. How do they get access to withheld funds that are due to them in Qatar and in Turkey? And that's what they want to see first. And so, the current impasse will be, when can Iran get access to some financial relief, and how might a procedure of opening of the strait still be managed by Iran, but proceed in some sort of measured, demonstrable way so that we see some progress.
Karen, there's been a lot of debate amongst experts like yourself about China really emerging as a winner amidst this energy crisis. They have somehow managed to massively reduce their oil imports, for example, but also the exports of green energy for also has been something that people look at, as you mentioned, as nations realign their energy policies. How beneficial do you think this could be for Beijing?
Absolutely. And, China has been very smart, was very well prepared for this crisis, had a very large stockpile of crude, maybe 1.4 billion barrels. We're not exactly sure. But they also put in place measures, which other countries have done, to restrict the export of refined product. But at the same time, they see that countries within the neighborhood in East Asia are certainly suffering and very desperate for particularly jet fuel, diesel, LPG. And so they've made some kind of side concessions. They would export some product to some countries with an agreement that these countries would sign on to a longer term supply chain deal for renewable energy products from China. So it's a huge opportunity for the Chinese renewable supply chain. And I think in general, there will be an interest in certainly an openness to Chinese EV production, but also their solar manufacturing production.
How do you see energy prices moving forward? I mean, I know we're back to below 100, but do you see some sort of pathway if they reopen the Strait of Hormuz? Does Brent go back to 90, or do you think that we're going to be staying and stuck in this sort of range for some time, given, as you highlighted, it's going to take months for things to really resume?
I think it really all depends on the threat perception of the neighbors. If we see, traffic that begins to move a bit more, it would certainly make a huge difference to crude markets if we saw even, let's say 5 to 10 very large tankers per day. That would be really an important increase in the kind of missing barrels to market. But that's not going to change our inventory status. It's not going to change their refined product shortage status. And so that's going to take months to unwind. So I would pay more attention to the price spike that we're seeing in diesel and jet fuel and gasoline, rather than what we're seeing in movements of Brent right now.
Karen, it's great to have you on the program. Karen Young there, senior research scholar at Columbia University, joining us. We're checking when it comes to coke and coal futures this morning, which I think have reached a daily limit. In fact, when you take a look at what's been going on, so we've been seeing with this weekend coal mine blast, and there you go. You see, when it comes to those futures, are spiking here this morning. As we talked about, this incident has left at least 82 people dead, and it's also prompted a vast rescue operation and promises of an investigation. We'll have more, of course, on the implications of this moving forward as well, Avril.
Yeah, I think Morgan Stanley also putting out a note on how the latest incident could trigger concerns about safety inspections, so that upward pressure to lift coal prices in the near term at the time where separately China has launched a campaign against illegal cross-border trading to stem capital outflows. Regulators plan to penalize brokerages, Futu Holdings, Tiger Brokers, and Longbridge Securities for operating on the mainland without a license. Managing editor for Asia Equities, Lian Ting Tu, is with us now. Lian Ting, so this came as a bit of a shocker, the way in which this crackdown sort of transpired, hefty fines expected for these brokers. I mean, what are the broader ramifications, I suppose, the risks from this?
Yeah, as you mentioned, it is really a big shock late Friday. It definitely caught the market participants by surprise. In terms of ramifications, we already saw, as you mentioned, Golden Dragon Index down 2.2% in the US on Friday. And it was the broker stocks like Futu that really got hammered. I think mainland reactions today may be relatively muted, as the crackdown was more targeted at offshore assets. But broker stocks may be the most sensitive today, given the read across for the industry. And to be sure, there are still questions out there to be answered. For example, whether mainland investors' onshore stock holdings, offshore, I should say, stock holdings will need to be liquidated within 2 years, or they are merely restrained from trading offshore stocks while they are in mainland China. Morgan Stanley seems to be leaning towards the latter. So yeah, there's still a lot of clarity to be had. And also, CITIC Securities just came out with some estimates that mainland retail holding in Hong Kong stocks is estimated to be around $30 billion. So if they're really dumping all at once, then that could really, wreak havoc the market. But again, it depends on the speed of the liquidation that may happen. So yeah, I mean, I think really we need to watch out for the Hong Kong Open tomorrow. One more thing thing I wanted to mention is a potential impact on the IPO market, because mainland investor, they have been pouring a lot of money into some of the hot AI deals debuting in Hong Kong recently. They've all traded really well. So without that support, potentially the IPO market may be cooling a little bit.
Nancy, there's also the sense of unease among regulators about this AI stock frenzy. I mean, we had that scoop late last week about how they're looking into more, these companies and funds. How do we make sense of it now?
Yeah, regulators, they are not trying to kill the AI thesis there. They're trying to weed out those pretenders. When you have a local winemaker doubling its stock price in a week on vague computing power rumors, Beijing has to step in. So they're basically forcing fund managers to inject some actual math back into a market that is running very high on FOMO right now. So it is not the real AI players that the government is having issues with. It is those AI meme stock trading at thousands of times their earnings that are in the crosshairs of regulators. So yeah, I would expect some short-term cooling off and a bit of a reality check for those frothier names. But for institutional money, clearing out the noise like this is actually a healthy thing.
Lian Ting, thank you. Lian Ting, too, there, our managing editor for Asia Equities, as she talked about two really big themes that could really react to markets in Hong Kong as they, of course, reopen tomorrow. And we are counting down the open of trade and onshore markets, Shanghai and Shenzhen today. Reminder, of course, as we say, Hong Kong is shut for a public holiday, as well as in South Korea, the UK, US, and parts of Europe also. So mind the liquidity sort of gap here this morning. This is the China Show. We are checking coking coal futures that have spiked this morning here in the back of this weekend blast at a mine in China's Shaanxi province that's killed at least 82 people, with the cause still under investigation. Now, the accident has triggered a vast rescue operation involving hundreds of emergency workers and an intervention from President Xi Jinping and senior officials. Stephen Sapchinsky, who leads our Asia energy coverage, joins us now. Stephen, obviously this is a very tragic event that has happened. Can you walk us through what we know so far of how this happened?
Well, it does seem that the safety measures at the mine weren't taken as seriously. There seems to have been at least 2 times last year where they had major violations. Local reports say that there were more people in the mine than who were actually registered. According to local reports, the workers weren't wearing GPS locators as well. So this does seem to be, this is a relatively small operation in the grand scheme of China's massive coal industry. This is not a state-owned company. It is a private company. And it really does sound like there were some strong safety lapses there, which is clearly causing also some outrage by the government, cracking down potentially on the local regime there in Shaanxi province, but also it seems that when you go on Weibo and you go on social media, there were a lot of comments there as well, talking about how this mine was skirting the strict safety measures that Xi Jinping's government had put in place to stop this exact thing from happening.
Stephen, this is coming at the time where China has upped its output to record levels to help with energy security, the demands of the economy. Are you expecting some sort of near-term impact on prices? We're already seeing how futures are reacting.
Yeah, so this was a coking coal project. So coking coal is used for smelting steel. It's a metals sort of material for coal, and it's not necessarily always used in power plants. And that's why we're seeing the coking coal price spike to a limit this morning. I think there are 2 ways to look at this. There will be a crackdown on the local area. You're going to see already there are reports saying that some coking coal mines are being shut for more inspections. I think the risk and the fear is that this extends beyond just coking coal, beyond just this small area where there is a large amount of coking coal mines, to the rest of Shanxi and maybe even nationwide. So the province is the biggest coal-producing province. It's a coal hub. It produces more coal than many countries. And if there is a crackdown across this entire province, then you could start to see thermal coal affected. Thermal coal is the type of coal that's used in power plants, and it is used for most of the power generation in China. If that were to happen, then you would see a larger potentially market impact in energy. China depends very heavily on its domestic coal for energy and power, and they import a little bit. But if there is some sort of crackdown that results in lower output from those thermal coal mines, then maybe they have to import a little bit more from Australia, from Indonesia. That tightens the global market, and that sends coal prices globally potentially higher.
Stephen, great to have you. Thank you for bringing us the latest and what sort of ripple effects we maybe should be watching for. Stephen Stupczynski, who leads our Asia energy coverage. Plenty more ahead. This is Bloomberg.
Your agenda in Greater China today, of course, Hong Kong markets are shut for Buddha's birthday, but we are still tracking, of course, everything around this coal blast probe, and also when it comes to oil, right? What we saw in the last couple of days about a possible deal between the U.S. and Iran that could be happening soon to reopen the Strait of Hormuz. So oil certainly will be in focus, given that we're back below $100 for Brent and WTI. Broker stocks as well, given the crackdown we saw with some of these cross-border trading companies, and there's going to be a CGB sale as well. So certainly a lot still on tap here, despite Hong Kong being shut, Avril.
Yeah, on that crackdown, it was a reaction certainly that we already saw in some of these broker-related stocks in the U.S. We saw the golden China also under a lot of pressure late Friday. So it'll be interesting to see when Hong Kong reopens what the market reaction is going to look like. But this is, of course, coming at the time where we are watching a couple of these other tech stocks on the mainland, AI computing-related ones, given how DeepSeek is going to make permanent these really steep discounts for its flagship V4 Pro model. So perhaps watching some of these momentum trades for tech as far as that is concerned. And as you said, watching some of these energy-related movements in markets following on from that deadly mine blast in Shanxi, the deadliest disaster we've seen since the year 2009. And as Stephen Stupczynski was highlighting just a while ago, coking coal futures are already showing that reaction in markets. We'll track the open next. This is Bloomberg. Welcome back. You're watching The China Show. We're counting down to the open of markets. Hong Kong, South Korea, they'll be shut today. But of course, we still have things going on the mainland, watching a couple of things as far as AI and computing related stocks are concerned, given how DeepSeek is set to make permanent some of these steep discounts for its flagship AI models, Yvonne.
75% discount certainly is a really good sort of headline there. So certainly, what does that lead to in terms of the competition among AI? And really, as it continues to intensify, do these price wars continue? But there are going to be parts of this market that might benefit. I'm guessing developers are certainly liking that news as well. So there's that. And then, of course, you have a situation when it comes to Iran, right? That we might be getting closer to some sort of deal to reopen the Strait of Hormuz. That certainly is lifting risk sentiment across Asia here today. But But as we mentioned, with Hong Kong, with South Korea shut, we are seeing liquidity that's been impacted. But Japan, those stocks are at a record here right now. Onshore markets are doing this and following those tailwinds, as we just mentioned. CSI 300, we're up about 0.6%. Shanghai Comp is also up about a third. We're watching very closely, of course, the chip space, just given, of course, that news about DeepSeek. It certainly could lift, of course, some of these chip stocks in particular. And there you go. Capricorn Tech is up 3%. Shanghai crude, we say, as we kind of noted here, is going to be seeing a bit more heaviness given what we've been seeing now that we have oil and crude and Brent at back below $100, right? On signs that maybe we're getting closer to some sort of MOU, according to President Trump, when it comes to Iran. Still some sticking points, though, when it comes to the nuclear capabilities of Iran and the like. But nevertheless, markets are going with it here right now. We're checking, of course, commodities, just given what we've been seeing, this deadly coal blast in Shaanxi province. So we have been seeing coking coal futures have spiked higher here. At one point did go limit up. So we are watching some of these coal-related stocks here today, which, along with the price of futures, are heading higher here. We're talking about more than 80 people that have died, and certainly does leave a lot of question marks of really maybe this whole energy security push from Beijing and the longer-term implications. Morgan Stanley saying, this could impact medium-term prices as, of course, these probes and investigations continue. The fear, as our Stephen Sapchinsky mentioned, is that this does spread or at least extend this investigation to the entire Shaanxi province, or even something that could be national, as we've seen with previous tragedies. So that certainly is one thing to mark at a time when China is dealing with this energy crisis with Iran and the like too. So that's certainly one thing to watch. AI computing stocks, of course, after that DeepSeek announcement that these steep discounts were supposed to expire this month. They basically have extended that. So with that, you're seeing a pretty mixed picture among some of these AI computing stocks here today. But you are seeing gains from Kingsoft, for example, Visual China Group. Chip stocks are doing this. If you take a look at what's been going on there, certainly there's been a lot of momentum around this side of the trade. There you go. You still see Hua Hong Semi and SMIC doing quite well in the onshore market here. We'll see, of course, how Hong Kong and the reaction is. Mind you as well, what happened on Friday, we learned that Zhipu and Minimax, those stocks have also been included in the HS Tech gauge. So we might see a pretty big reaction tomorrow as well for those stocks. Avril.
Yeah, meantime, this week as well, we also have some of these inflation readings from several major economies. There'll be a focus for investors. We have the big one, which is, of course, the Fed's preferred top-line inflation gauge, so PCE price index, and that could show a 2-month acceleration that is the highest since 2021. Other than that, Australia, Tokyo inflation readings as well. And then from central banks, we are expecting decisions from Korea and the RBNZ, both expected to keep things unchanged. So certainly the energy and inflation pass-through, that's something that investors will be watching as far as macro is concerned, Yvonne.
Yeah, the macro picture is still one thing, right? I think equity markets and equity traders are kind of divorcing themselves from that. They're continuing on with the AI trade. But when it comes to the bond market and what traders there are pricing in, they continue to express, of course, the inflation concerns, these Fed rate hikes, possibly as early as the end of this year, right? So certainly we'll wonder, now that we have seen Brent, back below 100, signs of maybe the Strait of Hormuz reopening, does that give some welcome relief to bond traders out there? We also heard from the White House National Economic Council Director Kevin Hassett making the case for a rate cut. Take a listen.
Again, we expect energy prices, as soon as there's a deal, to plummet. And when that happens, then there'll be a lot of room for the Fed to do the right thing at lower rates. But again, I respect the independence of the Fed and the intellect of Kevin Warsh, and I'm sure that he'll work it out on a data-dependent way.
That was Kevin Hassett speaking on Fox News. Joining us now is our next guest, Tracy Chen, portfolio manager at Brandywine Global. Tracy, it's good to have you on the program. Kevin Hassett was saying, once this war is over, he expects energy prices to plummet. Is that going to be a welcome relief for the bond market, you think?
Hi, Yvonne. Thanks for having me. I think that's definitely a temporary relief, but I don't think this bond sell-off is purely driven by the Iran war. because if you dissect what's the driver behind this global DM bond sell-off, you can see the five-year inflation expectation is actually the inflation expectation anchor is very well anchored. At the same time, the term premium and the repricing of the neutral rate, that's the real driver behind this bond sell-off. So even if we get some relief on oil price, I don't think the DM bond sell-off structurally will just stop here. Or we can temporarily see a bond relief rally, but in the medium term, I think the DM bond sell-off story just won't end here. Yeah, it's more a structural story. Yeah,
it's interesting too because, as you mentioned, real rates are actually driven higher now. Because there's so many other things, right? Rising debt levels. There's some that say, AI and this boom is also inflationary in some ways. So, what sort of range are you expecting here? When you take a look at the long end of the curve in the U.S. Treasury market, I mean, what range are we likely to stay in?
Yeah, if you look at 10-year, I think 4.75 or even 5. I think that could be the next step. And 30-year, I think between 5.5 to 6 is not too far off, based on the structural forces that you mentioned: the fiscal indiscipline, massive defense spending, AI infrastructure spending, and aging demographics, and also geopolitical turmoil. We have seen frequently the choke points around the world, right? I think all this can trigger inflation. Inflation breakout.
On that inflation front, Tracy, we also saw in terms of the curve on Friday, the 5s to 30s, I think it was the flattest we saw it in about a year. What do you think that signal is from investors? Is it because they expect Kevin Walsh to be prioritizing fighting inflation, even if Trump maybe wants a bit of rate cuts?
I think that's not because of people's expectation on Walsh to fight inflation. I think that's more a bond vigilante, that they are warning the central banks that they are behind the curve. They might start to hike interest rate because of the labor market in the U.S. is actually slightly improving. We see the jobless claim, they are slightly declining, and retiring of baby boomers, they can lower the participation rate, and at the same time, the very tight immigration policy will also lower the participation rate. So the job market is not that loose. It can tighten, and we don't see a wage price spiral. And I think that's the key. I think unless the Fed sees the anchoring of the inflation expectation is out of control, I don't think they will hike interest rate. But at the same time, I don't think they will easily build a case to lower the interest rate. So I think the base case for us is they will keep the rate on hold for the time being and just see how this Iran war will pan out and how sustainable if we have the opening of the Strait of Hormuz.
What's your assessment of what we're seeing in China? And do you see Chinese bonds, assets being a sort of anchor for emerging markets overall?
Yeah, definitely. Both the currency and the bond are serving as a true haven. Year to date, the CNY has been performing really well. It appreciated more than 3% against the US dollar, even though the rate differential between CGB and US 10-year has been widening by about 40 to 50 bips, but you still see CNY rallied very strongly. And the Sharpe ratio of the performance is very decent, and it's the true haven. In terms of CGB, I think it's the only major economist bond market that has been so stable and performed so well. I think it's because of lack of domestic demand for credit and weak growth that has been driving, and also the massive amount of liquidity in the Chinese financial market. I think that's also driven both the equity and the bond market outperformance.
Okay, so maybe that's where the haven play is. What about in terms of just the sell-off that we've seen globally, right? Duration has been selling off everywhere. Is this an opportunity to maybe look for opportunities? Are you seeing maybe some of these sell-offs are a bit overextended now and maybe it's time to buy on this dip?
Yeah, I think the interesting thing for the global bond market is DM and EM bifurcated. Like DM, we have been seeing global DM market selling off, led by UK and JGB, and also US bond market. But at the same time, the EM they have been outperforming. I look at the spread between EM and DM. They tightened from the like 300 to 400 bips level back in 2014, 2016, and now they narrow to like 100 to 150 bips. So that shows you where the real problem is. It's in the DM world. After the COVID, the government they just spend like crazy, and the fiscal indiscipline is there. So I think this definitely creates many opportunities for us. In the DM world, we see some opportunities in countries like Hungary and also and also UK even. UK has been selling off and because of the market's skepticism of their governance, whether UK is governable. But I think a lot of bad news already priced in. And at the same time, the central bank policy, they have been bifurcating. We have BOJ slowly tightening and BOE pretty much on hold because their growth is so weak. And ECB probably will slightly tighten, and like the U.S. Fed will keep on hold because, as I said, their base case is they look at labor market and also they look at the inflation expectation. And in the EM world, the central bank they will be on hold as well because some countries they have been hiking like Indonesia and Philippines, right? Because Indonesia's hike of their interest rate because they want to stabilize their currency. So we do see some opportunities in countries like Philippines because their interest rate curve is very steepened between 2-year and 10-year. It's around 140 bips. That's the steepest, and they will probably be included in the JP Morgan GBI index, and their foreign ownership is only below 5%. That's the lowest. So we like their after the sell-off, we added more position in Philippines government bond. So that's just an example of we take advantage of the sell-off.
Tracy, we got to leave it there. Thank you. Tracy Chen, portfolio manager at Brandywine Global. As we were talking about EMs, certainly we have seen currencies like the rupee drop to record lows last week. Of course, so we're hearing a bit more from local media, Mint there. They're saying that the central bank governor has said that the rupee may be undervalued. And this is after we heard from the central bank had intervened to shore up, of course, the struggling rupee as we start to see these elevated oil prices really push the currency to those record lows. So certainly one to watch as India markets open up here on this Monday morning. And Avril, really coming up, we're going to talk a bit more about APEC too.
Yeah, Washington's top envoy to APEC telling Bloomberg that energy exports are a key pillar of the Trump administration's strategy in the region. That exclusive conversation is next. This is Bloomberg. Welcome back. Here are some other headlines we're following from around the world. Foreigners seeking permanent residency in the U.S. will now have to leave the country to apply for green cards, except in extraordinary circumstances. The policy could leave applicants stranded for extended periods and disrupt families and companies sponsoring foreign workers. Immigration lawyers say the move is legally questionable and needlessly chaotic, and warn litigation is likely. U.S. health authorities are planning to temporarily bar green card holders from re-entering the country if they've traveled recently to Ebola-affected areas. The interim rule will remain in place for 6 months or until Health Secretary Robert F. Kennedy Jr. determines it's no longer needed. Authorities in the Democratic Republic of Congo had reported about 870 suspected cases and about 200 probable deaths as of Friday. Yvonne?
Well, the U.S. says the Asia Pacific has a huge potential to buy more American exports, including liquefied natural gas, amid the war in Iran. Speaking exclusively to Bloomberg, Washington's top envoy to APEC told us that energy exports are a key part of the Trump administration's trade strategy for the region.
APEC represents a $1.5 trillion market for the United States. We exported over $1 trillion in goods to APEC economies last year alone, and nearly $500 billion in services. It's an enormous market. A lot of the economies are growing. The digital opportunities in the digital and AI space are enormous for the United States. Mm-hmm. So we need to stay at the forefront of the conversation and of the agenda to make sure that the region sees the United States as not just the leader, but the solutions they need to power their economic growth.
What's the opportunity that is really there at hand between U.S. and China when you have China hosting APEC, you have the U.S. hosting G20, you have another summit coming up in September 24th, you have the APEC Leaders Summit perhaps in November. A lot of pressure to get some significant deliverables on resetting this relationship on a more stable footing. Do you think the U.S. already has sort of extended that fragile truce?
I think last week's meeting and outcomes were very positive, and we are excited to build off of those outcomes and to build off of that momentum going into APEC and G20. Of course, President Xi has agreed to visit the United States in September, another opportunity to continue to work on issues both in the bilateral relationship, but for us to continue to promote American business solutions and business exports to China and the broader region.
What do you say when inevitably your trading partners in the Asia Pacific do come to you and say, we are having trouble with oil price shock and inflation, supply chain disruptions, no doubt, obviously exacerbated by the issues in the Middle East. I mean, this is not going to necessarily go away overnight. So what is your response to them?
Well,
as they look to other countries like China as on their own bilateral relations.
Yeah, well, first of all, another big outcome from last week was the fact that President Xi and President Trump agreed that Iran shouldn't have a nuclear weapon, that the Strait of Hormuz should be reopened, and that Iran shouldn't toll traffic through the Strait of Hormuz. All of those are critically important to restoring the energy supply chain fluidity that this region needs. But energy security has long been a topic of conversation at APEC. It's certainly promoting energy security, promoting American energy exports is a priority for the administration. It's been a priority for us at APEC last year. Now it is again this year. What's critically important for this region is to continue to look to diversify their energy supplies so that they're more resilient. And America has a lot of great energy exports to offer. And so
that sort of dried up. I mean, the United States is the largest LNG exporter.
That's right.
But again, China's looking at alternatives. Obviously, you know about the Power of Siberia 2 with Russia. That's being continually discussed. And I think the LNG imports from America pretty much dwindled after the tariff barrage, if you will. You're hopeful, though? Do you think LNG exports to China can resume?
Well, to China, but also to the broader region. Our partners in the region are making more and more commitments to buy American LNG, to buy more American crude oil, because they see us as a reliable and affordable supplier of energy exports, the energy that this region demands.
Casey Mace, U.S. senior official to APEC, speaking to Bloomberg's Stephen Engel. And there's more from the APEC meeting in the next hour. We hear from a top Indonesian official about commodity export control plans that have rattled markets. Much more ahead on The China Show. This is Bloomberg.
There you go. We have liftoff. China has launched the Shenzhou 23 spaceship with 3 crew members aboard on this Sunday. And really, it was quite a fascinating sort of mission to the Tiangong space station. Among them on board is Hong Kong's first astronaut, Lai Kai-ying. Now, Lai is a former police officer with a doctorate in computer forensics. There she is right there, who's also serving as a payload expert. She also was a former police officer. She's been all over my Instagram feed. I don't know about you, Avril, but it's a proud moment, certainly for Hong Kongers like myself.
Yeah, super proud moment for the Hong Kong ladies at the stage, right? And I think she's also going to be responsible for conducting experiments at the Tiangong space station. Of course, this is coming at a time where the space race and the focus, I guess, for AI is, what the next frontier for compute is going to look like. So really the rivalry being taken to space, so to speak, Yvonne.
Yeah, you can see her excitement and her smiling there. The first female civilian astronaut who is also the first orbiter traveler from Hong Kong. So certainly we'll be tracking all those developments going through there, of course, on this mission. But yes, we're certainly proud of her there. And of course, it's always great pictures as well. Take a look when it comes to markets. Of course, we'll move on from that, given just all the smiles and the waves. You're certainly seeing plenty of smiles on this tech rally that continues here, given just, the AI sort of trade continues to take flight. And we still have liftoff here when it comes to some of these Taiwanese names here this morning. Look at the TAIEX. We're up close to 3%. Even with, South Korea and Hong Kong shut, really, a lot of the focus has been on Taiwan and Japan. I think the topics as well as the Nikkei are both at record highs here. And you're seeing a lot of these Taiwan AI-related names continue to surge today. Avril.
Yeah, we'll continue tracking these market moves in the next hour. Of course, it's really this tailwind we're getting from the AI-related trades. This is Bloomberg.
Welcome back to the China Show. Here's a look at the CSI 300 a half hour into the session. Of course, with Hong Kong markets shut here today, all the focus is really on what we're seeing in onshore markets. You're seeing actually a pretty moderate sort of rise in stocks here right now, but certainly there is a lot of price action. You take a look at what some of these chip stocks are doing. There's news on Huawei with this new chip breakthrough to possibly shorten the gap with TSMC. That's certainly lifting a lot of the semiconductor space here today too, Avril.
Yeah, watching those developments from DeepSeek as well, those steep discounts for its flagship AI model, might that also benefit developers in a way? Of course, on Friday, we got that bit of information about how Zhipu and Minimax will be included, so we'll see how Hong Kong reacts tomorrow. But in the meantime, it's really the tech-related trades that are driving the Japanese markets. You look at how the Nikkei is extending the gains from last Friday. It's really driven by the electronic appliances-related stocks. That's the sector on the topics. We're also seeing some of these energy-related names, including Impacts, on the back foot, given these geopolitical developments, or at least the optimism towards a US-Iran deal and how that is putting pressure on Brent prices, still sitting below $100 a barrel on the most active Brent contract. Of course, when it comes to these futures, we're also watching coking coal futures, following on from the deadly mining incident, the deadliest in China since the year 2009. And Morgan Stanley put out a note about how in the near term, maybe we see, given the scrutiny in the sector, that might drive up prices in the near term. Shanghai crude also tracking those declines we're seeing in Brent. Yvonne?
Yep. Certainly that's going to be one thing to focus as we track this coal mine incident that killed at least 82 people for now. So that certainly this investigation is underway in China and Shaanxi province there. Let's bring in our markets reporter, Anthony Stephen, who's tracking all things momentum and the like. And really this news of Iran and the U.S. possibly getting to a deal. We're seeing oil is back down again, dollar is softening a little bit, and it's just kind of full sail for the AI trade.
Yeah, look, oil at 110 didn't phase equities. And so oil at 100 is probably going to be just skies clear, right? And we're starting to see Japan and Taiwan really take off. They got off to a okay start. They were up around 1%, but now we're starting to really see some proper momentum. And that's driven by this relentless hunt for the next bottleneck in AI, right? So we've been through the basic semiconductors. You've done Samsung, Hynix, TSMC. Now people are looking at chip materials, server names, and the kind of names in Taiwan and Japan that are up 15, 20% just today. And one of the drivers of that is the Anthropic kind of fundraise, right, which is going swimmingly well. On the weekend, they managed to raise more money than they have anticipated, and so that IPO looks like it's going to set to perhaps surpass OpenAI. So these two companies are racing towards the finish line, and as you can imagine, they probably are putting out some very optimistic projections out there, right? And then we can touch on the China chip ecosystem as well, which is benefiting on its own.
Yeah, this Huawei 1.4 nanometer chips that they started making, they're saying that this is actually technologically getting very close to closing that gap with TSMC.
Yeah, so they're going a different way from the ASML dependency, right? The pure lithography kind of focus. They have something called the logic folding technique, which sounds like a video game move, but it's apparently going to give them 1.4 nanometer ability by 2031. That is 5 years behind what TSMC has promised, so 2028. This is a gap, but by the Chinese policymakers' standards, who think in decades, that is irrelevant, right? So there's getting a lot of enthusiasm in the domestic market now that people like Cambricon, SMIC, Huang can start to make absolutely bleeding edge chips. And you're seeing that in the stock price reaction today. These stocks are up 5 to 6% in the context of a market that's flat. So all these markets share a similar theme. Markets are hunting for the next AI bottleneck, and they're rewarding investors who've done that deep tech work.
Including in Taiwan, I suppose, that market seeing inflows as well. What are you expecting on that front?
Right, yeah. So $2 billion plus went into Taiwan on Friday. That's the highest in a few months. And you can just see people are chasing that market, right? It's rotating away from TSMC into these more niche players like Yageo, Delta, these kind of things that create the servers that AI goes into. And we had a couple of heads up on this team, right? We had very strong comments from Lenovo. We had very strong comments from Jensen Huang on CPUs. And Taiwan has a lot of the CPU know-how. Even in China, where you will need to build more kind of server farms, they will have to get that tech from Taiwan. So Taiwan is sitting really nicely on the crossroads of the build-out in both the US and China on these AI kind of server farms.
Anthony, thank you. Anthony Stevens there, a markets reporter on all things tech really today. For more, let's bring in from Montreal, Wang, Chief EM and China Strategist at Alpine Macro. Wang, it's always great to have you. I'm just wondering how you're witnessing all this from all the way from Canada. When you're taking a look at all this momentum plays around North Asia, even some of the China AI plays as well, can you continue to chase that momentum at the moment?
Well, I guess investors have to chase the momentum because the AI boom is probably not over. If you compare with the previous tech booms, there's still some room to run. So I think the bull market still has legs, So especially now the markets, the investors the gains are so heavily concentrated in a few names. So I think it's very dangerous to really bet against that. As an investor, I guess you have to follow the momentum. For us, as an EM investor, we have this kind of barbell approach. One is on the AI, the Asia tech space in Korea, particularly in Korea and Taiwan, and even the Chinese tech names. On the other hand, we also favor commodity-intensive LATAM and Indonesia. I guess you need to have you play both sides of the investment boom in the AI technology.
And what's the barbell you mentioned is the resource-rich sort of markets as well, right? That's how you balance it out?
Right, yeah. Because precisely as your previous reporter just made the case, AI boom now, people are focusing on the bottleneck in the AI supply chain, the technology supply chain. But don't forget the investment in technology in data centers, in all these kind of very metal-intensive infrastructure projects. They need resources. So that's why even now we had this massive energy shock. Metal prices have been very resilient. So we still believe metal prices will continue to rally. So that's why we prefer having exposure on both ends of this investment boom.
For markets such as Indonesia, though, you do get the sense that they are trying to control exports a bit more. Do you see that as a risk, a headwind for EM such as Indonesia?
So that's a frustrating market. I think there is a lot of cross currents in that particular market, and particularly the near-term volatility is whether the country will face some kind of downgrade from data providers. So, at the end of the day, the market is very cheap. This is probably the only market that dividend yield is higher than bond yield. So it's a very beaten down market. But in terms of control in exports of critical minerals, I think that this is a common theme, right? So this is actually these kind of measures will create bottleneck in the supply of these base metals. So maybe you have something similar to the semiconductor memory chips, those kind of bottlenecks.
Right. When it comes to Taiwan, I mean, we take a point about, you cannot sit out the rally. You kind of have to chase it. But I wonder, given the geopolitics, do you see risks as well in how, this is a market that's also very, very concentrated in an AI industry and a sector as a whole? Absolutely.
I think. Yeah, so basically our strategy is to play the boom at this for the moment. The near term, the momentum is still very, very strong. We don't think this is the upside is exhausted at this moment. But clearly, semiconductor, the Taiwanese market is so heavily concentrated in this one single sector and even one single stock, right? And overall, the economy is also very heavily dependent on this one single industry. And then this single industry now has become some kind of battlefield between the US and China. So you can feel like everything is concentrated into one single sector. And I don't think at the end of the day, the US or China are comfortable with the fact that Taiwan controls or monopolizes such a critical sector in the tech space. So that's why I think increasingly there is the risk that this crucial sector so crucial for Taiwan will face the risk of being hollowed out. But that's a kind of longer term story. In the near term, I guess investors have to participate in the boom.
How should investors deal with concentration risk, right? I know you favor Taiwan. I mean, you still favor Korea over Taiwan as well. But, when we've seen days in Korea where, 5% losses in the Kospi is almost like is normal now. Even 5% gains is the volatility is certainly something that creates quite a bit of whipsaw. How can investors still deal with that? Do you think that's, the concentration risk side of things?
Oh, absolutely. I think for EM investors, the concentration risk has never been this high, right? So pretty much all the gains have been driven by these three names. This is a really unique challenge. So the way that we try to deal with that is, we play the boom. We try to participate in the tech space, but on the other hand, as I said earlier, I also want to have exposure to the other side of the AI boom, which is material. The gains are a lot less so far, at least. So we think even we have some kind of shakeout in the tech sector in the one hand of the barbell, then the other side, if the investment boom is real, then the other side will face less downside.
Yeah, and I suppose the other thing about what we're seeing in the AI investment boom is also how it's perhaps affecting productivity on the mainland. And there is a differing impact, whether you're talking about consumers versus producers. What are you seeing? What's your assessment on that? And how does that fit into the thesis for investing?
Yeah, so I think the productivity story is mostly more positive on the currency, on the RMB, on the Chinese exchange rate, because if you think about it, really only the U.S. and China, they are having very rapid productivity growth, among all the major economies, right? So only the U.S. and China, they have very profound productivity growth. But the U.S., most of the productivity growth has kind of benefited producers. They have created this kind of producer surplus in the form of corporate profits. But in China, because competition is so intense, so then that basically this productivity gain mainly benefited consumers in the form of consumer surplus. So the form of in the economy, what can be reflected is ever falling prices. So that's why we see Chinese deflation. I don't think China has a sustained inflationary trend, even though headline inflation has been trending higher in the past couple of months. But I don't think China is out of this kind of disinflationary tendency yet. So the end result is just the Chinese currency is becoming increasingly cheaper and cheaper because of this intense competition on top of very rapid productivity growth. So for me, I think the long-term case for the RMB is very strong. As long as we have this kind of productivity growth that is benefiting consumers more than producers, the currency just feel increasingly cheap. And then we have a much stronger case for the RMB to really appreciate in a multi-year horizon.
You have a 4 handle. Can you walk me through how plausible that is? What would it take to get to renminbi at 4? I mean, it seems like that could pressure exporters quite a bit.
Yeah, well, but my case is likely the RMB will trade with a 4 handle. So maybe from here, maybe 20-30%. From the current level. I don't think that's a very aggressive forecast if we talk about, let's say, a multi-year horizon, right? So, think about the Chinese currency appreciated by almost 50% in real terms between 2005 and 2015, right? So I don't think the multi-year process of 25 to 30% appreciation is such a massive problem for Chinese exporters because there is very rapid productivity growth in the Chinese manufacturing space, right? So, I think we can feel the second wave of the Chinese, we can say the second wave of China shock. In the first wave of China shock between 2002 and maybe the end of around 2012, then China massively gained global market share. But those are in the more cheaper, lower end of consumer products. Now, China is moving up the value chain. This is the second wave. So I expect the second wave will bring substantial appreciation to the RMB in a similar fashion to this first wave that we saw a decade ago.
Yeah, and that's a super interesting call, this higher value added China wave that might be coming, and maybe we see yuan at the 4 handle. Thank you so much for your time and your analysis. Wang, Chief EM and China Strategist at Alpine Macro. Here's a look at how Asian markets are doing as we go to break. This is Bloomberg. We're seeing a read-through in Japan as far as Lenovo earnings are concerned after the PC maker showed that strong driver of server demand is really boosting earnings here. And you're seeing that in AI-integrated PCs as a sector. The tailwind is quite obvious for Japanese AI server-related stocks, including Taiyo, Yuden, tech component makers. They're climbing by the double digits in Japan today. We'll be watching Lenovo shares when they reopen on Tuesday after Friday saw a 26-year closing high. That's after it reported strong growth in AI-related earnings, offsetting some of these challenges from rising component prices. CFO Winston Cheng told us the world's leading PC maker remains committed to meeting customer demand in the coming AI-driven decade.
Certainly, we're not defined by one quarter. We're in for the long haul, and the AI spend and opportunity is also for decades to come. But we're defining this as the AI decade for Lenovo, and I think we're in the first year of that journey, and you can see the result of that focus. In terms of our capabilities, we've actually been investing in this for over 10 years. Our ability to be able to produce at scale on a global basis for both on the device side and also the infrastructure side is unique to Lenovo. We can serve hyperscalers and also enterprises on that basis as well. And our portfolio set with the IBM heritage that when we made the acquisition in 2015 gives us a solid foundation to be able to serve the AI compute capabilities today, given the high performance compute genetics that we have with our industry liquid cooling technology as well.
Winston, what is the truth of what's happening with memory? How severe is that as a bottleneck?
Well, certainly this incredible spend and development of AI in terms of the AI infrastructure is really driving the component shortages. Not only memory, but you're also hearing it in terms of CPU and of course GPU demand as well. I think that would be multi-year opportunity in terms of that demand, but at the same time, the industry needs to catch up in terms of that supply chain to satisfy that demand. But I think for now, that's causing the supply and demand imbalance is causing the memory prices to go up. But on the AI infrastructure side, we're able to pass through that demand because that's where the strong demand is in terms of the pricing for pass through. But on the device side, I think the lower end, you're starting to see in terms of the first quarter IDC numbers that those that cannot get supply, I think have seen their market shares decline.
So Winston, what you just outlined, and bear with me on this one, how much are you negotiating with yourself? You have different business lines. They both need common components, high bandwidth memory. You know that on the infrastructure side, the server side, that's where the demand is. So do you have to have a word with yourself and say, well, what about my PC business? Do you have to make a choice of where you prioritize?
That's a great question in terms of, but I think what the suppliers appreciate with us is that we have that global portfolio. We have the most complete portfolio from PC to tablet to smartphone, and I think that gives them the forecast necessary as our long-term partners. We also have that demand forecast from the server side as well of our business. So from that perspective, we are strategic partners for suppliers as well in terms of that accuracy of that forecast. We need to supply in terms of satisfying our long-term Lenovo friends in terms of the ThinkPad, which is so well loved in the market. And I think we need to make sure that there's enough supply going to that demand as well.
Lenovo CFO Winston Cheng speaking to Bloomberg Tech co-anchor Ed Ludlow. Here's another look at how Asian markets are doing as we head to break. Mostly positive, though a lot of these markets, of course, are shut for a holiday. This is Bloomberg.
Welcome back. Here are some of the major stories we're following from around the world. The cause of an explosion at a mine in China's Shaanxi province is under investigation after the Friday blast killed at least 82 people. The accident has triggered a vast rescue operation involving hundreds of emergency workers and an intervention from President Xi Jinping and senior officials. State media says that early investigations suggest serious violations at the privately run mine. U.S. health authorities are planning to temporarily bar green card holders from re-entering the country if they traveled recently to Ebola-affected areas. Now, the interim rule will remain in place for 6 months or until Health Secretary Robert F. Kennedy Jr. determines it's no longer needed. Authorities in the Democratic Republic of Congo have reported 867 suspected cases and 204 probable deaths as of Friday. Foreigners seeking permanent residency in the U.S. will now have to leave the country to apply for green cards, except in extraordinary circumstances. The policy could leave applicants stranded for extended periods and disrupt families and companies sponsoring foreign workers. Immigration lawyers say the move is legally questionable and needlessly chaotic and warn litigation is likely.
Yeah, Yvonne, as we watch policy out of the US, I think one thing investors are still keeping tabs on is the deal that we're potentially going to get on Iran, at least based on what some of these US officials have been telegraphing. Although if you're listening to what Iranian media is projecting, they sound a bit more circumspect about the chances, the prospects of a deal. There are still these sticking points, especially when it comes to uranium and nuclear assets, sanctions as well. They want the unfreezing of their assets there in Iran. You're still seeing, though, in terms of stock futures, they're brushing aside these geopolitical concerns for the moment, at least. It's really about AI. You're seeing NASDAQ 100 futures also outpacing the broader gauge futures. Take a look at what we're seeing in treasury markets. Of course, US, UK, Hong Kong, South Korea markets are shut on Monday. In terms of futures, you are seeing the short end, the front end, pointing to more declines of more gains, I should say, a bit different from what you're seeing on the longer end. So maybe on the long end, they're priced for further upside as far as treasuries are concerned. Of course, this week, we are also watching out for data when it comes to the Fed's preferred top-line inflation gauge. You also have a number of central bank decisions coming from South Korea as well as New Zealand, and then those inflation readings coming from Australia as well as in Tokyo. We've got our own version of that coming out of Singapore this afternoon at the time where the growth has showed the AI boom helping to offset some of these war concerns. This is Bloomberg.
All right, we're taking a look at Tokyo here, 11:29 a.m. approaching there in Japan, and certainly there will be seeing plenty of optimism around this whole tech trade, AI trade here today. You're still seeing records that have been hit on both the Nikkei and the topics here this morning. We're up close to 3% gains for the Nikkei, so certainly plenty of spotlight around the Tokyo situation. Taiwan continues to be hot here today, and really, I think just giving them a chance to shine when Korea has been shut as well. 158 levels for the Japanese yen, so we have seen the dollar the softer footing here on the back of that Iran news. Oil prices are also lower here this morning as well. So that's why you're seeing a bit of relief in the JGB market as well, Avril.
Yeah, watching what this means for treasuries, of course, when U.S. markets reopen, and we are seeing those treasury futures rallying. Take a look at how the rest of Asia is faring. Energy is on the back foot. Tech is on the front foot as investors continue searching for these so-called AI bottlenecks. That's really what's been fueling this rally, even in the absence of South Korea market participation today. As you said, really Japan is the one that is extending those gains. And actually, it was interesting even on Friday how Japan's gains already outpaced that of South Korea, but keeping tabs as well on what's happening between the U.S. and Iran, Yvonne.
Yeah, let's get to the latest on that. Senior U.S. officials say the U.S. and Iran are closing in on a deal that would reopen the Strait of Hormuz, but it may take several days for both sides to get final approval. In Truth Social posts, President Trump says the U.S. won't rush into a deal and reiterates that Tehran will not be allowed to have a nuclear weapon. Let's bring in Bloomberg's John Hertzkovitz. It seems like we've been here before, John, but, it seems like we're getting close to some sort of deal being inked. How possible do you think that it could be this week?
Sure. As you said, we've been here before. It seems that we're closer to an interim deal than we may have been previously. Markets have seen this as a positive, but we've been down this road before. The terms of this deal are along the lines of what we've seen in similar agreements. What we're looking at is a 60-day extension of the ceasefire, Iran relinquishing its supply of highly enriched uranium, the U.S., Iran reopening the Strait of Hormuz, the U.S. ending its blockade, Iran asking for sanctions relief. Whether that will come or not is another matter. So, it seems a little bit closer, but the main sticking points have remained. And one of the key issues of this is what will happen with Iran's supply of highly enriched uranium and whether it can reconstitute its nuclear program and its ballistic missile program.
And what do we know of how quickly traffic can resume through the strait if there is indeed an interim deal?
Yeah, it's going to be difficult to see how that is going to work out because we have that bottleneck. Ships have been trying to get out for months now. We've seen the trickle. It's getting a little bit. A few more ships are getting through, but it may take weeks or several months for the shipping to resume. We have the worries of mines in the strait, which is something that has to be cleared up for the resumption of normal shipping. So it's not like the flip will be switched and ships are going to start moving, but we could see a gradual movement that could take weeks or months to unwind if there was a deal to reopen the Strait of Hormuz.
John, thank you so much. Bloomberg's John Herskovitz in Tokyo for us. Meantime, Indonesia says global markets and major trading partners can expect updates on new commodity export policies within weeks. President Prabowo Subianto last week announced the government would take direct control of exports of some of Indonesia's most important commodities. His vice trade minister told us the government continues to work on the legal and structural rollout of its new centralized export agency.
This export body is aimed to, again, protect our national interests. We understand that there are many major commodities that we are currently exporting, and really just understanding how the export of these commodities can have a positive multiplier effect to our nation, right? So it's limitizing all the negative things which may occur, and that really is the gist of this body. And again, because this is very new, it's still under progress, right, in terms of the legislation, in terms of the building up of the body itself. And so we are going to see how this progresses over the next few weeks to come as well.
It's quite a daunting task, isn't it? All of a sudden, overnight, we're hearing that a new agency under the Sovereign Wealth Fund of Danantara is going to be now mandating all that data to come into their data banks, and then they're going to also try and get a hold of pricing, right? Because again, you're the biggest exporter of palm oil, and you're having others set the pricing. That is the concern, obviously. But how daunting of a task is this?
Well, I think in many ways it will require a lot of collaboration. Everybody has their own task to fulfill, including that of the Ministry of Trade. So the Ministry of Trade will be responsible for enacting a governmental regulation, which will then regulate the export component. Whereas Danantara, as you already mentioned, has their own kind of expertise and portion to this whole mechanism. And I think the most important thing, and this is something that my president is always stressing on, is the fact that, we need, as a government, we need to work together, side by side, bearing in mind the responsibilities that we each have. And so it becomes less daunting when you know that you're not in it alone, you're not doing it alone, you're working together to create something that we believe would have a good impact to our nation.
How do you see it affecting potential exports to places like China? As I said, they are a big buyer of nickel pig iron for their lower quality stainless steel. They buy a lot of your palm oil. Do you see it impacting because of the uncertainty, and the timelines have not been necessarily laid out?
I think the immediate impact would be to first understand the mechanisms that will be in place. Again, this is still under works. And so we are sure to communicate these step-by-step process to the relevant, to the relevant companies, stakeholders, and so forth. And again, because this is a change to the system, we're sure to disseminate this information in the most effective manner.
And then deadlines. That's another thing I think the markets were a little bit concerned about. As of June 1st, which is coming very soon, next week, these exporters would need to supply the data to this newly formed entity. And then we had competing comments about the actual scheme would begin as early as September or even January. Do you have any more clarity for us as far as what has been communicated to you?
So right now, the respective ministries are, taking their part in creating the necessary domestic regulations to ensure that this body can run according to plan. That's one aspect. And the second aspect that we will be pushing going forward is the dissemination of information with respect to this body itself and what that would mean to stakeholders.
And that was the Indonesian Vice Trade Minister Dia Roro Esti Widyaputri speaking to us at the APEC meeting in Suzhou, China. We're checking some of these Indonesian movers here today. So FTSE Russell came out with an announcement about removing 4 Indonesian equities, so including the likes of the energy giant Dian Swastitika Sentosa from its global indices. You're seeing quite a bit of decline there as well. That's the second one that's been touted there, or they mentioned there, as well as one of 4 stocks that have been removed now. This is, of course, following that regulatory crackdown by the index provider targeting companies with high shareholding concentration that did fail to maintain minimum free float requirements. So there you go. You are seeing some pretty big declines there on some of these stocks here this morning. Of course, you can rewatch that on the Bloomberg Video Hub, that interview. Subscribers can explore live streaming, news, and interviews. All our Bloomberg TV shows, documentaries, reporter analysis, and more. Check it out at Bloomberg.com/videos.
Taking a look at some of these AI and computing stocks on the mainland, it's pretty mixed for the moment, but you are seeing a bit of gains in the likes of Haigon against the backdrop of perhaps developers rejoicing somewhat from the benefits of DeepSeek. They're going to make these steep discounts, 75% discount on the flagship V4 Pro AI model. That's going to be permanent. So maybe we're seeing a bit of that read-through at a time where, when it comes to the domestic chip making capabilities, take a look at how chip stocks on the mainland are faring. SMIC, Hua Hong, certainly in the spotlight today, and almost climbing 10% on each of these stocks at the time where Huawei has been touting that maybe they're making a bit of a breakthrough to shorten the gap with TSMC, and certainly this would help to remove the overhang when it comes to ASML and lithography. So maybe that's the market reaction we're seeing overall at the time where markets are looking for the next AI bottleneck, so to speak, Yvonne.
Yeah, so there's plenty of good news, right? You mentioned the Huawei story, and then, the DeepSeek and those steep discounts that have basically been made permanent now. Let's get more on this with our Bloomberg opinion columnist, Catherine Thorbeck. The DeepSeek news was quite interesting. Obviously, I think as a developer, it's certainly better bang for each intelligence buck in some ways. And it really shows the different approaches that the U.S. and China, are going through in this whole AI wave. When, you're talking about OpenAI, Anthropic, that, those are offerings that are actually still quite expensive right now.
That's right. And, I think this news is really going to start sort of begging the obvious question among sort of developers and enterprises really around the world of why should I be paying so much money for the likes of Anthropic or OpenAI, when I can get sort of just as good AI for so much cheaper. And so I think it's in one sense sort of a wake up call for Silicon Valley, this sort of permanent pricing model. But at the same time, I think this is also a little bit of a threat to sort of the domestic Chinese AI ecosystem in the sense that it's going to be very, very hard for DeepSeek's competitors to now sort of raise prices and sort of keep the competition going and really find a way to sort of turn a profit, which has been really a struggle for the model makers in China for a while now.
So maybe a threat, as you say, for the domestic Chinese ecosystem for AI. But what about the effect on the labor market? I mean, this is really a global story. It's not just something that is raising concern in China, right? What are you seeing there?
Yes, so this has been something that I've been really keeping a very close eye on. We saw the news of the Samsung strike last week, which I think was really interesting because it was really the first major labor action from the AI era. And the way I saw it was really a fight between sort of the have and have mores. There's sort of a joke going around the Korean internet that, the sort of best outfit you can wear on a first date or on a blind date is an SK Hynix vest because, these chip makers have really made just so much money over the past few years because of this big boom. But I do think that in the long run, what will be more interesting to watch is how workers that are displaced by AI actually sort of rise up and organize and how they sort of seek their own share of sort of this AI boom that we're seeing. Yeah, and really how companies need to approach it. I think,
the stand chart, Bill Winter's comments certainly did also bring a lot of that discussion as well last week. Tell us a bit more about just where we are in the AI race in general. Your column today, Catherine, talks about how perhaps Japan is falling behind a bit.
That's right. So I think if you look at sort of just the broader adoption numbers, Japan is sort of lagging global peers when it comes to using AI and sort of integrating AI into enterprises. But I really think Japan is a country to watch, because when you really look at sort of the upsides of this technology, I mean, Japan is just, there's so many opportunities for it to actually do good. And I think we're seeing so much sort of AI backlash really sort of rising in the US, which has been something that's interesting to watch. But in Japan, it's a very tight labor market. The labor market is actually shrinking. So the, policymakers, business leaders, they actually kind of need AI to sort of fill these jobs. And so that's something that I think I'll be really keeping an eye on. And I think that this sort of second mover advantage that Japan has could actually really be sort of a big advantage in the long run. They can sort of see what's going right elsewhere, see what's going wrong, and sort of learn from that as they sort of actually push now to integrate AI into sort of more facets of society. And we're finally starting to see sort of the diffusion numbers start to tick up in Japan. So I'm really keeping a close eye on that.
Yeah, I guess AI could help solve Japan's demographic problem, but these are investments that pay off maybe decades into the future. I mean, that seems to be the horizon that the likes of SoftBank is telegraphing. When it comes to, this race and how long it is this a time where we wait decades into the future for that payoff?
Absolutely. I think when you look at any sort of past general purpose technology revolution, it really did take decades. It didn't matter sort of if you sprinted at the beginning. It really mattered if you did sort of the marathon work of really diffusing this technology into, as deep and as many facets of the economy as possible. And I think that's where Japan really, if it sort of jumps on this opportunity, has a real chance to sort of get this right and really sort of seize this sort of second mover advantage.
Catherine, thank you so much. That was Bloomberg opinion columnist Catherine Thorbeck. You can catch latest piece from Catherine and all of her other columns as well. That's on the terminal. Those are also available on Bloomberg.com. Plenty more ahead. This is Bloomberg. Here are some of the stories we're following. U.S. Secret Service agents say they shot a man near the White House on Saturday after he opened fire with a handgun. Authorities identified the suspect as a 21-year-old who had a prior arrest for unlawful entry near the White House in July 2025. He was taken to hospital where he later died. U.S. Secretary of State Marco Rubio says the U.S. and India are strategically aligned on energy. He was speaking in New Delhi alongside Indian Foreign Minister S. Jaishankar. Rubio met with Narendra Modi on Saturday as he began a 4-day visit, inviting the Indian Prime Minister to the White House as the two sides work to improve ties.
We also are strategically aligned on energy. Energy and the ability to generate power is the key behind all of the great industries out there. Whether it's data centers, whether it's artificial intelligence, whether it's the ability to modernize and continue to advance economically, all of it begins and ends with the ability to generate the power necessary, not just to raise standards of living, but beyond that, to expand into new industries. And both of our countries are strategically aligned in ensuring that we have a world that can not just produce but deliver the energy resources that are necessary to power a modern economy.
We strongly believe that energy markets should be left, to the market.
Well, Taiwan's representative to the U.S. says China is expanding its military pressure across the Indo-Pacific region. Alexander Yu told us that the self-governed island is ready to defend itself and that the U.S. has reaffirmed there has been no change in its policy.
The U.S. administration has been very emphatic, during and after the trip for President Trump to Beijing, including President Trump himself, mentioned that there is no change in U.S. policy towards Taiwan. And so that's in itself, it's a real reassurance to Taiwan. But at the same time, we are ready to defend ourselves. We're trying to beef up our own defensive capabilities, and the United States has been our primary provider of armed sales to Taiwan, and we hope that to continue to do so in facing this mounting and growing aggression from mainland China.
No doubt you heard the president talk about that $14 billion arms package as a bargaining chip, and I wonder what your reaction to that is, bearing in mind what you just said, that you've gotten votes of confidence from the administration, as you say. What should we make of the president saying it's something that could be deployed as a bargaining chip?
Well, I'll respect President Trump's decision. He also said, and the administration mentioned just yesterday, that a decision will be made by the president anytime soon. We hope that it will be a positive one. But again, the important thing is there's no change in U.S. policy towards Taiwan, and that includes longstanding arms sales to Taiwan, and especially commensurate with the threat level that Taiwan is receiving. And the threat level we're receiving from mainland China right now is very, very high.
I understand that there's no official change in policy, but it does seem that there is a change in energy and the vociferous nature by which previous presidents have defended Taiwan to the Chinese, and the kind of lukewarm defense, if that even was a defense the president delivered in Beijing. Do you feel like he delivered a strong enough message in those meetings with the Chinese leader?
Well, Xi Jinping, from what we know, Xi Jinping mentioned Taiwan a lot during his 2-day trip in Beijing. He wanted to make it the topic of discussion, although there are many, many things that should have been, it was on the table. And he talked about Chinese version of the Taiwan so-called problem. And I stress that Taiwan were not the problem. The problem is mainland China. They're the aggressors. They're the ones ramping all this military pressure on not just Taiwan, but throughout the Indo-Pacific, including Japan, the Philippines, etc. So their ambitions go way beyond Taiwan. They're armed. They're engaging in this very massive military buildup. And it's just not for Taiwan. It's trying to impose their influence not only in the Pacific, but beyond it in the Pacific. So we are well aware of China's intentions to try to swallow Taiwan. Again, we want to stress that Taiwan, the Republic of China, the official name of my country, we are not subject to the Chinese administration or control. The People's Republic of China have never been never controlled Taiwan. So the claim on Taiwan is something that is, it's a bogus claim, but they have this intention, and we'll do whatever it takes to defend it.
Taiwan's representative to the U.S., Alexander Yui, speaking with Bloomberg's David Gura and Christina Ruffini. Let's take a look at how markets are faring on the mainland. You're seeing the CSI 300 well in the green, headed for a second day of gains, and there are volumes behind this. I guess this also reflects that positive mood we're seeing in much of the region. A lot of this is AI related, thanks to DeepSeek to some extent, but also the headway that the likes of Huawei seems to be making on the chip making front. Yvonne?
Yeah, so there's still some, I guess you could say, milestones, technological breakthroughs that really does narrow the gap. The Huawei suggested with this new 1.4 nanometer chip with TSMC. So certainly that's lifting a lot of the chip space here. Of course, we've been tracking what's going on in the Iran situation. Is there now a clear path when it comes to the long end of bonds here, now that we are inching closer to maybe some sort of deal to reopen the Strait of Hormuz? So it could be a welcome relief. But we were just talking to Brandywine saying there's other drivers that's driving the sell-off here. Real rates are heading higher because what we're seeing with rising debt levels, this whole AI boom itself as well. Yeah. We're going to watch, of course, the India Open here today, Avril, as we track, of course, what's been going on with the rupee and, of course, what we've heard from some of the messaging from the central bank as well.
Yeah, seemingly sounding like they think the rupee is undervalued. These comments from the RBI Governor at a time where Indian authorities have really been trying to pull out all the stops to help defend the local currency. For the moment, though, you're seeing stock futures pointing to gains this Monday. We'll see how that fares when trading there begins. Inside with Linda Amin is next. This is Bloomberg.